Okay, let's unpack this. The market right now is, it's acting like it's throwing this massive patio party because the storm clouds finally parted, right? But it's completely ignoring the flooded basement right beneath its feet. So welcome to this deep dive into our latest global market intelligence report where we're tracking this massive global pivot from a stagflationary geopolitical crisis to a tentative diplomatic detente.
Yeah, and the sunshine that's driving that patio party is this draft U.S.-Iran peace agreement.
Right.
Because, this deal de-escalates tensions around the Strait of Hormuz. And just for context, that handles about 20% of global oil and LNG. So we saw Brent crude just instantly plunge 11% to a 6-week low.
Which totally explains the tech sector going absolutely ecstatic right now. I mean, we're seeing an S&P 500 9-week winning streak, and AI server shipments at places like Dell are skyrocketing, like 700 to 57%.
Yeah, it's wild. What's fascinating here is how capital actually flows when a geopolitical risk premium decompresses like this.
Unpack that a bit. Why does that happen?
Sure. So when the threat of an energy supply shock fades, oil gets cheaper. Markets assume that cheaper energy is going to cool down headline inflation.
Which means the Fed can just relax.
Exactly. They won't have to keep hiking interest rates. And when investors believe the cost of borrowing is going to stabilize, they aggressively rotate their capital into those long-term growth assets like AI. That's why the VIX volatility index just dropped to a super complacent 15.74.
Okay, so what does this all mean? That makes sense in theory, but wait, I'm looking at the actual economic data here, and it completely contradicts the euphoria.
Oh, absolutely.
I mean, U.S. GDP just cooled to a 1.6% pace, and PCE inflation actually accelerated to a 3-year high of 3.8%. So how are investors popping champagne when the basement is actively flooding with sticky inflation?
Well, if we connect this to the bigger picture, they're making a highly concentrated bet. They are essentially gambling that falling oil prices will just, do the Fed's job for them.
Wow, that feels really risky.
It is an incredibly fragile assumption. I mean, look over at Europe. The European Central Bank is facing a 93% probability of hiking rates again.
Just to fight off the lingering effects of those previous energy shocks.
Yeah, exactly. But American markets are currently assuming they're just somehow immune to that whole dynamic.
And here's where it gets really interesting to me. That American assumption relies entirely on a draft peace agreement. And officials explicitly state this deal isn't even finalized.
Right. It's literally just a draft.
To me, it's like a Jenga tower. If the Fed is the roof and inflation is the foundation, pulling out that single piece block collapses everything else. The whole structure just caves in.
That is a much more accurate way to frame the fragility here. Because if those negotiations fail and the strait closes, the energy choke is immediately reestablished.
And oil spikes again.
Oh, easily. Oil could surge back past $120 a barrel.
Which instantly kills the whole narrative that the Fed doesn't have to hike. I mean, with core inflation already running hot at 3.8%, a severe second-round energy shock would force the Fed to hike rates preemptively, right?
Yeah, just to defend their credibility at that point. And when the cost of capital suddenly spikes like that, it violently compresses the valuations of all these highly leveraged tech and AI assets.
So that risk-on rotation rapidly reverses.
Precisely.
And it wouldn't just be traditional tech taking the hit. Think about your crypto portfolio. I mean, Bitcoin is already precariously consolidating near $73,476 right now, amid something like $2 billion in ETF outflows.
Yeah, it's hovering. And if traditional risk assets violently sell off, crypto gets dragged down right along with them. It exposes the reality of what the market is actually valuing. We have this late cycle economy that is fundamentally fragile beneath the surface.
But risk assets are priced for absolute perfection.
Exactly. Geopolitical perfection.
Which leaves you with a really critical question to chew on today. If a single localized security incident in the Persian Gulf can just instantly erase trillions of dollars in AI and crypto valuations, are you actually investing in technological innovation? Or are you just blindly trading geopolitical probability? Watch your step out there on the patio.